So, Jake, it's a pleasure to have you here at BA, and
Yes,
then
sir.
here on this podcast to get to know you, because you're a new member. So I know you have your following, you have your clout, you have your expertise, you have your followers and all this. However, we want you to introduce yourself at BA. So
Yeah.
tell us about your backstory and who you are and what you do.
Absolutely. So Jake Claver, born and raised here in Texas. This is where we are today, here
Where
in
at?
Dallas. Dallas, my whole life.
Really?
Yeah.
I spent 25 years in the Arlington-Fort Worth area.
Okay.
Yeah.
Yeah.
I mean,
Yeah, you got the cowboy boots.
I'm
up.
French,
Yeah.
but I'm like, I got Texified, man.
Yeah. So I don't know how far back you want me to go. Maybe I'll just keep it to what's relevant. So
Yes. However, I really want to know how you got to the relevancy. How you got here. I want to know this.
yeah, we'll walk it back to 2019. So I had a big pivot in my career. A couple things. I'd worked in industrial sales, which is very different than what I do now, for about a decade, scaled multiple locations for a Fortune 500 company, was acquired by another company to come help them scale their business, was promised some equity. That didn't work out. So I started doing some M&A work and was consulting, and all during that time I was also bodybuilding. And competed at the national level 3 times, never placed well. But after November, nationals in 2019, I bulked up to like 260, about 8% body fat, but my health wasn't so great. My son was young at the time, and so I decided to just kind of pivot and take the disciplines that I had learned through my career and also my bodybuilding, and double down on business and finance. And took the money that I had been saving for my wife and myself to buy a home, and jumped into the bottom of the market when everything crashed. I'd stayed out of stocks. I went to school for finance at UNT here in Texas, and just felt like everything was overvalued. I knew there was going to be some other pullback, right? The stock market's cyclical. There's going to be something that happens. Everybody gets scared. Everybody sells off, and I was poised and ready for it. So took the money that I had there and then from my previous employer, rolled that into the market, and did pretty well. Facebook, Amazon, Google, Tesla, rode those things back up. And about May of 2020, I started looking at de-risking because I didn't know if it was going to continue going up, what was going to happen with COVID and everything else. And so I was watching a lot of things on gold, Austrian economics, real estate, and I watched a debate between a Bitcoin guy and Peter Schiff, who you may or may not know. He's a gold bug. And that's when I realized, this is software, and this is why everybody was crazy in 2017 around Christmas. My brother had put like $5,000 in the market and then turned it to $200,000 in like a month. And I was like, you need to sell. And then he didn't, and it collapsed on itself, and he lost all his money. And I felt vindicated, like, haha, you should have sold like I told you. But after I understood what the technology was, it's going to be the 4th industrial revolution. You're going to see, Web3 applications, the efficiencies of smart contracts and blockchain. There's going to be a lot of great things that happen. Most people aren't even going to care, though, because it's just going to things are just going to happen faster. Money's going to move faster. You'll be able to get paid real time for things. Like, those are the real things, the tangible pieces of this technology. So anyway, once I understood that, I took all the money that I made in stocks, parlayed that into crypto, and I happened to get in at the right time before everything took off in 20 and 21. I don't think I'm smarter than anybody else. I just think right place, right time. God's been very favorable for me. And so after I made a bunch of money, I was like, okay, how do I not mess this up? Are there advisors for crypto? Like, are there CPAs or accountants or lawyers or wealth managers, people that could help me, right? Because I didn't come from money. My family's never had a bunch of money. And so I started seeking those people out. I started calling. I called almost 150 different firms across the U.S. that said they dealt with crypto. Most of them were like, yeah, we got a client that dealt with some Bitcoin one time. And I'm like, you don't really know. So I put a lot of time and effort into understanding the space at that point. And I was able to vet down to like the 20 people that we work with now on our family office. And so I curated that group of people around myself, and then I started talking.
So out of a need, out of a gap that you
Yes.
saw, eventually you created an environment that supports that goal.
100%. And then I started talking about it on Twitter and other social media platforms, and people gave me the deer in the headlights look. Like, how can you do this for an unregulated asset class? What are you doing? What are you talking about? And then people made some nice introductions for me to some family offices and other people that I consult with, and just the business kind of grew organically from there. Now we provide a full breadth of services for anybody that makes, you know, 20 to 50 to $100 million in digital assets. We have institutional custody. We have an SEC registered RIA. We do the estate planning, taxes, everything that you'd expect.
Here's a question for you. How do you find these individuals?
They find me.
They find you. So it is through your education, the platforms on X or on YouTube or where else, that actually slowly, gradually, people come to you.
Yeah, well, a lot of word of mouth, right? And when you take care of people, people are nice enough to make referrals and recommendations.
And birds of like feather tend to flock together, so they...
Exactly. Yeah, so, you know, when you're able to help somebody out and solve a problem for them, and they know somebody else that has the same problem, they make an introduction, say, hey, this is...
And because the ability and expertise to actually provide with a track record, you know, there are few and in between, and therefore it's easier for them to make the decision to work with you.
100%.
So earlier I was over there, we were chit-chatting. I mean, you were talking, and
yeah, I do that a lot.
Sorry. I was like flying like miles above my bald head, and I was sitting there, it's like, what is he talking about? So, can you tell the average Jerome, you know, that
knows nothing about crypto or any of this? Yeah.
Nothing. I mean, like, I'm brand new to Apple Pay, you know, like that's where I'm at.
Okay.
So, what is the smart moves maybe to do now? You know, if you have $1,000 or whatever.
Yeah.
But also, what is, you know, if you can paint out a little bit what the future might turn out to be, you know, when it comes to banking or whatnot, with the new presidency we have that is very favorable to it. So, like, step one, step two.
Yeah, absolutely. So, do you use a payment app like PayPal, Venmo, Cash App? Most people have. Wise if you're overseas. And you have two options when you want to move. So somebody pays you, you have $100 on there. You get two options. You can either pay a small fee and it goes direct to your bank account, right? Or you can wait 2 or 3 days and it'll settle for free.
Yeah.
What if you could settle for free instantly?
Certainly would choose that.
Right. That's what this stuff does. That's what blockchain, smart contracts, all of that technology will enable. So faster, cheaper payments is really the killer app for this. And so, you know, let's say you, like we talked about real estate in the other room here at this event. Contractors wait a long time to get paid for doing the job that they're doing. But if it was on chain and you had smart contracts in place, as soon as that money was distributed to the GC, it would get paid down to the subcontractors. And there wouldn't be this struggle or waiting or latency for payments. So the velocity of money is going to increase exponentially. When they start implementing this, and the frictions and costs for moving money will decrease substantially.
So what does that do to banks? Because banks thrive on those fees.
Yeah. So imagine you were around for email.
Yeah.
Perfect. Okay. So that's the kind of the analogy.
Email, you mean the thing like we burn fire and put something like
smoke
is that what you're talking about?
No. Yeah. So you know.
Do I look that old? What kind of question is that?
Well,
I got water here, boy. I tell you what.
So
why are you around for email?
Well,
what kind of question is that, man?
I was
around. Come on!
I was around for email too, barely.
I did kind of ask myself, what the heck is he saying?
I know, right? God,
So
I mean, don't cut that off. Put it on there.
Yeah, leave it on there. It's fine. It's fine. And there was a newscast that was out, and they were like, "What is this @ sign? What is this email thing? Nobody's going to adopt this, right?" That's kind of where digital assets is at, right? Nobody. It's ambiguous. People.
Yeah,
really
that's
don't
what I'm asking you, because we hear a lot about it. It's very geek environment, and also just the name crypto is cryptic. You know, the kind of sort of it has this feel about it. Yeah.
And so with the email, most people sent postage back then. Took a couple days for your money, or not your money, but your information to get to the other person, your data packet, and it cost you some money for the stamp, right? So there was frictions there that existed in that market. How many letters do you think were sent each day back then, just on average? a lot, right? But let's say
millions.
One household probably sent, what do you think, 5 letters a week?
Got no idea, but maybe, yeah.
Let's say it was 10, okay? How many emails do you send per day?
Not as many as I receive.
Right, but it's still a lot. It's probably more than 10 a day that you send personally.
Yeah.
So what the banks see here is there's frictions and latency in the system, but if you remove those, the volume of payments is going to increase exponentially on the other side of that when those things go down. And the margins that they make are substantially greater. So it costs less than a penny to send $1 million using crypto. Right now it costs the bank, maybe it costs them $10, they charge you $15 to send a wire, right? But on the other side of it, they can charge you $1 and they're making 99 cents and you're going to be sending way more payments than you would with what the current circumstances.
So are the banks looking forward to that?
They are, and they're going to implement it. I think, with the administration, like you mentioned, they've removed a couple of key friction points with SOB 121. We have, stablecoin bill that's on the docket in Congress to be passed here in Q1. You've got ROUSD, which is a Ripple stablecoin that is a dollar-denominated stablecoin, USDC, Paxos. There's some other ones that are out there, but I think you'll see Bank of America, Chase, all of the large banks, and then you'll also see fintechs and social media platforms launch stablecoins for payments.
Absolutely.
And you've already seen Twitter picking up money transmitter licenses. They're in like 47 states or something at this point, but they're going to launch a stablecoin. And people will hold those, and it'll be like credit card rewards. So you'll get paid cash back or like extra points or whatever if you hold theirs versus somebody else's, and they'll pay you more money than you'd get in
you get a blue macaron or not.
Yeah, exactly. So that's going to be how it affects the general public. It's not going to be.
So I don't mean to I don't want to geek out too much on it, but so here at BA we have individuals that are extremely successful. And they need to know, what to do with their money.
Right.
Like, do they keep it like dollars in the bank? Do they keep it in the stock market? Should we kind of start looking into something else? And this is your expertise. So I don't know what kind of disclaimers we got to put.
I'll give it to you. So I'm not a financial advisor. I own a regulated financial advisor firm, and we employ RIAs that can give you financial advice if you would like it.
Thank you very much for this clarification.
But this is for entertainment and educational purposes
only.
So my views are not reflective of the firm.
Nor BA.
Right. Yeah. Nor BA.
Nor me.
So there are American-based cryptos that Trump has given the nod to. He said that crypto companies that are based here and haven't moved offshore, it's likely that he's going to put forth an executive order or some other regulation that removes cap gains tax on those networks or those tokens, which I think is going to be extremely bullish for specific networks. Some of those include the XRPL and XRP, Hyperledger, which is XLM, Hashgraph, which is HBAR. You've got Algorand, Cardano, a lot of the things we've seen ETFs for, filings for ETFs for here in Q1 of 2025. I think we've had 60 ETF filings for different cryptos. Solana is included in that group as well. So, yeah, I think that there's a lot of opportunity in American-based cryptos.
So if we were to translate that into, we see a lot of those advertisements on the Instagram where not, like you missed Amazon, you missed PayPal, you missed, e-com, you missed, so where are we at,
You haven't missed it yet. There's been a little bit of run up, but we haven't seen actual utility or usage of these networks yet, and we haven't seen full regulation on the space. So I know it's scary. When I talk to a high net worth individual or a family office and they're skeptical, I look at it as an asymmetric bet. And if you're ignorant, you should probably diversify across, maybe 10 different ones in the top 50 that you think have a solid, American-based company behind them. And might look at 0.5% of your net worth, 1% of your net worth. Something that's you're not going to miss it if it goes to zero, but if it hits, you might double your net worth over the next
just because that
years.
one piece just takes off.
Right.
Because earlier you had that conversation where you talk about like pennies that turn into thousands. Mm-hmm. So like I don't know. I don't want to say what's your prediction, or because we cannot use any of these words. But like, if you were to have an imaginary target, that of what because you do that for your family, right?
Absolutely.
So like for your own family, like what is it that you say? I'm comfortable putting this because the target that I'm envisioning they may hit is somewhere over there, so that it kind of gives. Because in the conversation we had, people basically had their brains blown and like it was all over the floor. It's horrible. I wish they had a helmet on, just it didn't make such a mess. So where are we at? Like really, what are like the possibilities?
I'll give you. So I can only talk to my specific situation.
Yeah.
Right. I'm not going to give people financial advice or tell you what you should do, but I'm going to tell you where I am and why I'm.
And what you do?
So I only own XRP. That's the only one I own. I spent a year and a half trying to figure out why it wouldn't work and why something else was going to take its place or it wasn't going to happen. I just became more and more convicted that it was after doing the market research and meeting with the firms that are using it, talking to the investment banks, doing all my own due diligence on it. So there's things that have to transpire for what I'm about to discuss to happen on a macroeconomic scale.
The chain of events that needs to take place, that are most likely to take place, and therefore there's a fair assumption that's kind of the scenario we're in.
Correct. So a lot of people may or may not know about the reverse carry trade in Japan.
I definitely don't.
So Japan has had super low interest rates for the last 30 years. They've had lost decades. Their stock market's been way down since the 80s. And they've been trying to drive economic expansion through easing of monetary policy. We've seen this since 2008. We had QE, and then they lowered interest rates here in the U.S. But for there, it's been low much longer. So people have borrowed a lot of money in yen, sometimes at negative interest rates. Like they would pay you to borrow money from them, which seems like a foreign concept, but that was real. So people have gone there, got that money, swapped it for dollars, and then put it to work in our stock market and U.S. Treasuries. If you put it in U.S. Treasuries and you were getting 4% on that money and you were getting paid 1% from them, it's basically a risk-free 5% on free money that you were making.
Yeah.
The problem is now Japan has started to raise interest rates. So their 10-year yield is around 1.3% right now, which is up hundreds of thousands of percent from the zero where they were before, which causes a squeeze on those people that were operating on, maybe they were already operating on tight margins. So because they borrowed all this money and they put it to work in our stock market and treasuries, and now Japan has started to raise interest rates and we're starting to lower interest rates, those margins that those people are making on that money are getting squeezed. So we started to see the reverse carry trade unwind last year in August. You saw the stock market fall 13% in one day. And then Bank of Japan said, no, we're not going to raise interest rates anymore until market volatility stops. And that paused it out through the end of the year. But now they've started to raise interest rates again here in 2025. And you're already starting to see some of that. There's been some other narratives that have been put out, like DeepSeek on NVIDIA. That's not what caused that to move like it did. And now we've seen, a couple more down days in the stock market. And they're talking about tariffs. Oh, it's the tariffs. It's neither one of those things. That is people selling off their positions in the stock market to take those dollars, swap them back for yen, and repay those loans in Japan before they default. And as their interest rates continue to rise in Japan and their 10-year yield continues to rise, you're going to see a run for the door. There's going to be another huge move down across all markets. It's not going to matter what it is because there's tens of trillions of dollars that have been borrowed in yen over the last 20 years that are going to have to be paid back. When that happens, there's going to be a liquidity crisis. You're going to see limit down on the stock market. They're going to stop trading on things. The other thing that's going to happen is U.S. Treasuries are going to flood onto the market. And so the only way that we can stabilize the debt market here in the U.S. when that happens is introduce stablecoins. So we've got, all of these large fintech, social media platforms.
So what we're saying, because that's kind of, I don't want to play on the tragedy, but it's a little bit like a tsunami.
Oh yeah.
That happens over there, and we're not really aware of it because it's over there, and we focus on the amazing halftime that we had
the Super Bowl. Yeah.
I'm a little bit sarcastic here, but anyway. So so we kind of talk about this, where actually all the drama is happening over there. And it'll
make its way over here.
Exactly,
though.
and the wave is running deep, and it's about to show up on our shores.
Yeah.
And to avoid the consequences, I'm trying to translate your geek stuff here. So to avoid that tsunami to actually hit the shore and break the stuff, we need to actually create a diffusion and go into the new
system.
Dependable system that is.
And it's already sat there in the background, ready to go. It's problem, reaction, solution, just like they always
do.
So
this is something that's been, so for the most people, it seems like it's like sudden, but in reality, it's been building up for a long time.
Well, they've known this was going to unwind for a long time. It's not like Japan could just always be the way that they were. Their economy is going to grow at some point. We've seen the Nikkei go up. It's past all-time highs previous to the 1980s.
I knew a darling named Nikki.
Oh, well, she was probably a nice lady. So we've got... That's going to transpire, and they'll pass stablecoin regulation here, and that's going to drive huge amounts of demand for those treasuries that'll get dumped onto the market. And we'll have to do it in order to shore up the debt market here and make sure the dollar doesn't collapse on itself. So
this is actually becoming a necessity.
It will be.
It will be a necessity, and it will be a necessity that is actually to protect the economy because it is so tied in together.
Yes.
That's why it's global. I mean, that just kind of sounds a little cheesy, but...
Well, but it is, yeah. I mean, the markets are global at this point, and they're all dependent on one another. We saw that in 2008.
At the end of the day, you're uber successful in your thing. You have already, your followers, you have your authority, you have your credibility, you have, all this. So why come at BA? What is it that you want to bring in, but also... what is it that you're looking for? How can we kind of support you, and what's it going to look like?
So I have a deep understanding of macroeconomics and high level in business, how to scale M&A, and digital assets in particular. But my long-term goal is to sit on the board of the top 10 most progressive companies in the world. And I feel like a lot of those are going to be born out of masterminds and other groups that I've been a part of. Known Mike for a while, excited to be a part of the group, bring my expertise and my value that I can, and then also work with fantastic other professionals that are here in the group to be able to, provide value in business and in other areas in life.
Awesome. Love it. And now another thing I would like to touch a little bit on is I think this past election has revealed, for those that were not fully aware, the power of personal branding. That's one thing we talked about before. It is everything happened on personal branding. Right?
Absolutely.
And I think those that a little bit like Bitcoin and the crypto and all this, you get those that just look at personal branding and vanity, whatever. I don't need it. And then you see Donald Trump just plow through everything with his brand, because that's literally what happened. We see the second man in power, so to speak, Elon Musk, that is the brand. And that's funny because we see Trump and Musk. We don't need the first names anymore. But then we can go Donald and Elon. We see, this is the level that they have branded themselves. And what do you see the necessity of entrepreneurs to go into personal branding, and how have you built up your personal brand, and how you feel the power of it when it comes to talking to those high net worth individuals that are maybe very skeptical. They need a lot of convincing to go into this new environment, and how personal branding is actually helping you make those connections and those conversions.
I think it's imperative. I don't think with AI and the other progressions that you're going to have, a lot of the how to do things is going to go away, and other people's perception of you and their ability to know, like, and trust you is going to be how humans are able to be competitive with AI in that landscape. If you don't have a personal brand that you can then put behind whatever business or product or service that you're marketing or using to help people, then it's hard for people to relate to you, right? And sometimes you're polarizing. Like Donald's very polarizing.
Very.
And Elon is too.
Very.
And people don't like that, but a lot of the time you're going to have to pick a side on things and be vocal about that. And you have your hobbies and your passions, but that's what people relate to you with also. Like I played golf when I was younger. People that play golf, I resonate with. I can have a conversation about it. Bodybuilding, right? So people work out.
I used to work out actually a few times with Ronnie Coleman in Arlington.
Yeah.
We can have a whole conversation about lightweight.
Yeah. Nothing but a peanut. Yeah. So anyway,
That was a long
I
time
think
ago.
that it. I don't want to say it's a requirement, but almost is. I mean, look at Gary Vee. You look at a lot of these other personalities, Grant Cardone.
Polarizing, all of them.
But you know who they are and you know what they want, right? And I have a lot there. I don't agree with Grant on everything. I don't agree with Donald on everything. I don't agree with Elon on everything. But I have a lot of respect for all of them.
Oh, yeah.
Right. And so I will listen to what they have to say, even though I may not agree with it. And I think that's the reciprocity that people want to build with their personal brand. And we can get into the logistics of like how to do that. Is that more the nuance that you want to kind of cover here?
Well, not necessarily. It's just I want to also kind of touch on, like, you know, we talked about the predictions of what might happen and all this. I think currently we are in a big phase of adoption of AI, you know, so all these avatars and all this stuff kind of cool, and, you know, those like talking on your behalf when you're not even there, all this cool. But I think there will be a big saturation. People are going to get fed up with it. And I think they're going to get also very leery of trusting, because they won't know whether it's real or not. It's coming. I mean, like in the next 6 months, you won't be able to tell the difference. I am not real, actually. I'm looking at the camera. It's not me. But, you know, like we're going to get at the point where you won't be able to know. So we need to understand that the power of personal branding is critical now, because there's a necessity to actually be human, and they kind of like demonstrate that we are human. And the powers of the events like BA and others, we actually meet, like, I mean, you're bodybuilders, you're hard as a rock, man, but you're not a robot. You know what I'm saying?
Right.
Like, this is the thing. And I think that there'll be that saturation. Also, that's where, you know, the magazines that I do, for example, people love the paper. It's crazy. I mean, we have all the digital, the notifications and all the apps and all blah, 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 all this stuff. Eventually, people get a book in their hands or paper, and like you can feel on their face, you know, this is like the analog. Oh man, it feels good. You know, it does. It has this thing.
100%.
And the sales of book are going up. This was fascinating. The sales of book are going up.
You see, you know, everything's cyclical. People move away from things and then they'll move back. But I think there's a nostalgia, right?
Yeah,
For
everything's vintage.
physical.
Like everything is vintage.
And physical magazines.
Lo-fi. They put the sound of the needle on the vinyl into the music that is digital, just because that feels good. That has that sound, that richness, doesn't it?
Absolutely.
We miss that.
Yeah, people want that, you know. So I think you're positioned really well for that. Excited to see the cover next month and who you have coming out there.
Yeah. It was going to be you and at some point. So
well,
come on.
I'm game for it.
But yeah, so it's awesome. I'm excited. And thank you so much. And I'm really looking forward to having you come on these events where you're going to give the update. That's kind of what I'm looking forward to, the update as to what happened between each quarter and where it's going, to kind of help us navigate and understand where it's going, because I think it's going to be the wild ride. I mean, I think the storm is picking up and the waves are about to get big.
Yeah, well, like you said, the tsunami's coming, and I don't think people they're telling you on traditional media that it's these other things, but the reverse carry trade unwinding is what's causing that, and it's about to get much worse.
Yeah, and I think this is important that like we are educated to understand what to do and how to do it, so that when it does show up, we can't say we did not know.
Right. Well, and like I said, there's this digital asset, XRP in particular, I think is going to benefit the most from adoption to be able to save or shore up the financial system.
Awesome. So, well, it was a pleasure to have you with us, Jake.
Yes, sir.
And we're looking forward to the next one, because there will be another one. I know for sure. There's so much stuff coming. We'll have another one. And thank you again.
Thank you for having me.